Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, January the 16th, MLK Day. And the year's 2023. Let's talk trading. When not to trade. These videos are for educational purposes. Your results may differ from mine. We spend a lot of time thinking about when to trade, how to get in a trade, but we sometimes neglect to look at the other side, when not to trade, when something might be telling us not to trade. And I kind of going to break this down into three sections. One is external reasons not to trade. Two, internal reasons not to trade. And then three, technical reasons not to trade. So thinking about external reasons not to trade, it could be anything from the weather, because if the weather is bad enough, it could cause your power to go out. You wouldn't want to be stuck in a trade, especially if you didn't have your stop loss or take profit in place, and have the power go out on you. There could be external factors in your environment. It could just be maybe too noisy. It's just not a good time to trade. Maybe the pair you're trading, or one of the currencies in the pair that you're trading, maybe they're experiencing some type of political turmoil or war for that matter, or once again a bad weather event. These things can happen. So if you know about them, you might say, you know what, now might not be the best time to trade. For example, today, MLK Day, it's a bank holiday. That's external. There's nothing I can do about it. And sure, there's been some movement. In fact, the pound, I believe, at the moment has, let's see, where's the daily range? It's over 100 pips in range, 117 pips. And normally, about this time of day, there hasn't been that much range. But the thing is, trading could be kind of spotty. And it's funny because I thought, if anything, the London boys would run the price up, but it seems like, and I think they did for a while actually. Whoops, I went the wrong way on the charts. Actually, it looks like the Asian session ran it up, and then the London traders came in and put it back down, and now it seems like the U.S. traders, at least during the U.S. session, seems like the pound is going back up. And I think I had mentioned yesterday, I think we were looking, for the pound to hit the pivot. Looks like it did hit that weekly pivot, and it also looks like it hit the monthly pivot again. So I had mentioned last night that if it crossed below the open, it probably come down and take out the pivot, and it looks like it did. Took out that weekly pivot. And I also, yeah, took out the weekly. We've already taken out the monthly. So external factors. There might be something going on in your life that's external to trading that might just have you in a bad way. Now, that could also be considered an internal factor. Your mind just isn't right. Your head's not in the game. You're ill. You've got some emotional turmoil. You know, you've got stressed. Not a good time to trade. And you need to do a self-check before you put your portfolio at risk. You could have had a bad day at the office. Somebody in your family could be giving you a hard time, you know, relationship issues, or, you know, maybe the day before you partied too hardy and you're feeling the effects. Not a good time to be at your trading platform, your terminal, your phone, however you trade. So, you know, internal, you know, once again, just have to do a self-check. And then finally, technical reasons. Somebody asked about the spread because I mentioned it yesterday. The spread was too high on at the time, and it was, I think it was like 2 something pips. I don't know if I have a spread indicator on any of these, but you can just look here. It's spread somewhere like 1.8, 2.1 pips. I guess for some reason I didn't put a spread indicator on any of these charts. So technical reasons, you know, spread's not right. Maybe something's happening to the platform. It's your speed isn't quite right. Your computer's running slow. I consider those, somebody could say, well, that's external, but I would consider those, it's technical, not like just technical indicator reason, but, you know, some technicalities that just make it so, hey, you know what, maybe I better not trade. You know, a news event, you know, that would be external. Some people don't like trading during the news. In fact, there's one of the traders over on the Facebook group said that I think he was done trading the news because it seemed like no matter which way he picked, he picked the wrong direction. I know how that can feel, and that's one of the reasons to be a rat, just trade in one direction. Even though trading with Walmart, I've kind of gotten away from that. But it's like, okay, if it's in the red rat zone, I'm a red rat. If it's in the green rat zone, I'm a green rat. You know, and then, you know, internal. You just, for whatever reason, you just can't read the market. You're not seeing things clearly. That might be a reason not to trade. Conflicting signals, once again, a technical reason. You know, you might have something say, I should go long, but then something else is going on, you should go short. You know, a lot of times traders will put multiple oscillators on their chart when, you know, one is more than enough. I mean, you can sit here, like, look at this H4 chart. You had a big bar, now you've got an inside bar, and this current one's an inside bar. It's like, well, geez, which way do I go? Do I follow the H4 candle color? You can see right here, we're right at the double low. It could go either way. You know, you could drill down and say, well, you know, from the 30-minute on down, it's negative. It just came out of a flip-flop box. You know, indicator 2's going red, but all of a sudden there's a 1 ball here. Which way do I go? Maybe I should just ride this one out. I'm 8 pips below the open. But once again, look at the spread. I'm not going to trade, you know, with over a 2 pip spread. That's, why should I give them that much money? You can see the spread right here. This is the ask, here's the bid. It's kind of like, no, no thanks. I don't want to trade that. So those are some of the factors for saying, you know what, I just shouldn't trade. Because, big part of trading is waiting for the signal. And that's a lot of times what we do. We wait for the signal, but while we're waiting, we're not we're not looking for things that tell us, even if that signal comes, maybe we shouldn't take it. That almost takes you out of being a technical trader into being more discretionary, but part of trading is discretionary. Trading itself is discretionary. So you just might want to have something that you want to check beforehand. Some of these things you can check before the session, your trading session starts. Some of them you might just want to do a check, you know, in between trades. Okay, I just got out of a trade. Let me go down the list and see if there's any reason here, maybe why I shouldn't trade. Maybe I need to wait for something to change before I trade. So you can see here, even though it pushed down that one ball, had we gotten in at the double low, I mean, you barely could make a pip. And price pushed all the way down to 96, maybe 2 pips at best. But if you remember, that was a pretty fast move. And so then again, the speed of the market. If it's moving so fast you can't get in, or maybe you can't get out, you might want to take that into consideration. That's definitely external. Some people like trading when it's slow, some like trading when it's fast. So I hope that gives you, maybe you could pick up one of those things and add it to your trading routine. I'm not saying you have to consider them all. I'm just putting them out there. You pick and choose which ones you want to consider the next time you trade. And we just take a quick look at the charts here. Blank chart, M30. You can see it seems like it's making higher lows, lower highs. So it's consolidating, which makes sense because once again, it's a U.S. holiday, U.S. banking holiday. And you can see prices, but it's dropping again. So now if you had shorted the double O, you could take a couple of pips off the table. Oh, and in case you're wondering, why do I have these red circles and blue circles with arrows in them? That's the TRO, price action high-low indicator. And it basically is just indicating which way you might want to trade. And you can see here, had you not taken those 2 or 3 pips, the market would have taken them right back. Once again, it's just kind of a interesting day to trade. So, fellow traders, let me know what you think about when not to trade. Maybe there's something that you look at or consider that I didn't list. And always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.